Please note that this lesson is using actual sale transaction records. To maintain privacy, the data has been intentionally blurred. This lesson was recorded live. Some sections of the lesson may not have a smooth transition when displaying a new screen. This lesson will illustrate how to add and/or override the off-the-top deductions within an analysis session. Off-the-top deduction strategies can be created, analyzed, and compared within CAP. As with any new analysis session, the first step is to search and transfer specific sale transaction records from your back-office database into the CAP application. As illustrated in previous lessons, the search items will include closed transactions from January 1st to December 31st and display the results using the commission plan name. When creating an off-the-top deduction strategy, best practices would only analyze and compare new deduction strategies with the original sale records that used off-the-top deductions. The off-the-top search criteria item allows the search to only locate and retrieve sale records with off-the-top amounts. 3 options are available for the off-the-top search item. Using the All option will transfer all sale records regardless of whether or not there was an off-the-top deduction on the sale. Y will only retrieve sales that have an off-the-top deduction amount, and N will only transfer sale records that did not have an off-the-top deduction. With all of the search criteria items entered, select the search button to retrieve the sale records that match the search criteria items and display the results by plan name. The time to search and display the results usually takes just a few seconds. Now select a commission plan for the analysis session. In this lesson, the new $14,900 plan was selected. With the plan name highlighted, click the Process Results button to begin the process. The time to process the sale records will depend upon the number of sale transactions transferred for the analysis session. In this example, 192 sale records took less than a minute. Off-the-top deduction analysis runs will use the same commission plan, so there is no need to select and compare another plan when analyzing off-the-top deduction strategies. One of the off-the-top deduction analysis options provides the ability to override any existing off-the-top deduction amount. In other words, replace the original amount with a new off-the-top deduction value. Select the Override checkbox to instruct CAP to override the original off-the-top amounts. The override can be a flat amount or a percentage of either the gross commission amount or the property sale price. With the override adjustments completed for both the list and sell side of the transaction, select the Recalculate button to process the results. CAP now has 2 analysis runs that can be used to compare against each other. Click and highlight run number 2 with the adjusted off-the-top deduction settings. Select the Compare button to see the results of the comparison analysis. The results clearly illustrates that overriding the original deduction amount with a 6% off-the-top amount will significantly increase the broker owner's total earnings. In many cases, when analyzing off-the-top deduction strategies, more than one analysis run will be created to provide multiple scenarios for the broker owner to consider. Let's create another off-the-top deduction analysis run, but this time using a 5% deduction value based upon the gross commission. The override option will be used again. An important note: when creating an off-the-top deduction strategy, CAP allows you to use just the list side, just the sell side, or in our example, both sides of the sale transaction. With the third off-the-top analysis run completed, click to highlight run number 3 and select the Compare button. We will compare run number 3 with the 5% deduction against the original run number 1. Using a 5% deduction as the new override value, the broker owner still increases the total earnings when compared to the original off-the-top deduction amounts. It's not unusual to create multiple off-the-top analysis runs to provide the broker owner with various strategies to consider. One more off-the-top analysis, but this time using 4% as the deduction value. Remember that each time a new analysis run is created and processed, CAP is reclosing and recalculating all of the sale records again, but using the new off-the-top settings. With the fourth run completed, we'll highlight it and compare it against the original run, just as we have done with runs 2 and 3. The add setting for off-the-top deductions will not replace the original off-the-top amount. Instead, just as the title suggests, it will combine the original deduction amount with the new amount calculated from the settings entered. Once again, the new value can be a flat dollar amount or a percentage of the gross commission or sale price. Using the add setting and a 2% increase in the off-the-top deduction amount, this analysis run still favors the broker owner's total earnings when compared to the original run. One more example before ending this lesson. This time we will add a 1% increase to the original off-the-top amounts using the gross commission as the base, and compare this run with the original run number 1. When the process of recalculating the sale records is completed, we will click it to highlight it and select the Compare button. This sixth run will be compared against the original run number 1. This sixth analysis and comparison run also creates an advantage to the broker owner's total earnings when compared to the original sale record data. CAP allows broker owners to analyze off-the-top deduction strategies to compare with one another to determine whether or not any of the scenarios will create the additional earnings the broker owner is seeking without changing the original commission plan. This ends Lesson 5.